Is now the time to invest in the stock market? That's a pretty difficult question to answer. The first thing to understand really is risk. Whenever you're dealing with money or investments, there's a risk associated with it. And we've sort of been programmed from a young age to view certain things as remarkably safe, like putting your money in a bank account. Well, if you put your money in a bank account, especially in the US, it's insured up to $250,000. Various laws and regulations enacted after the Great Depression to try to make sure you don't actually lose all your money in your bank account. And you might get a small, tiny interest rate for that. There are some online banks like Ally, which offer relatively large interest rate, and some others like Wealthfront and smaller niche banks. Now, of course, there's always the risk that the United States collapses completely, right? And that insurance actually doesn't do anything because the government has dissolved. And for people who view that as a serious risk or are trying to hedge their bets, they might purchase rare metals like silver or gold. It's a similar thing with inflation. The Fed has tried to stay consistent on inflation, and our records of inflation are actually fairly consistent. We're not going up like 6-7% one year, then 8% that year, but there is always a risk that hyperinflation could occur. Now, admittedly, I'd say that is a monumentally small risk. You are not compromising your net worth significantly by, let's say, putting money in a bank account, I would say. Now, it might not be awful to have some gold or silver aside. It really depends on how you want to approach things. But gold and silver don't necessarily skyrocket in values, right? The whole point of the stock market, well, not necessarily the whole point of the stock market, but one of the reasons the stock market is appealing is because you can make large gains in the stock market. You can have your account value go up 20, 50, theoretically infinite percentage. Well, I guess there's a total amount of money in the world, but you get my point. You can make a lot of money in the stock market if you know what you're doing. The thing is, it's risky. If you put your money in a bank account and make, let's say, 1.5% APY, that is a consistent investment that is fairly safe. Although with inflation being typically at minimum 2%, you're actually going to be slowly losing money over time. It's difficult. It's very difficult to say, hey, now is a perfect time to get into the stock market. What I have pulled up right now is SPY. SPY is an ETF, which is, to put it very, very crudely and maybe annoy some more experienced viewers, it's like a bunch of stocks meshed into one stock. It's a collection of securities into one, and it tracks the S&P 500, which is a collection of companies that meet certain standards for rules such as market cap, quarter-over-quarter profit, things like that. And the S&P 500 sort of exists to give a representative view of the stock market. And one thing to realize is the stock market isn't necessarily the U.S. economy. There is and often disconnects between them. Remember, not many people are investing to, well, I'd say probably no people are investing to make the world a better place. They're investing to make money. They're risking money to make a lot more money. So the S&P 500, this collection of securities, SPY is the biggest ETF managed. There are tons that track the S&P 500, but SPY, for the most part, and this can be argued a lot, but it does a pretty good job of tracking the health of U.S. stock market. If we look at a chart of the S&P 500, and we maybe look at a 6-month chart, we can see, wow, things were way higher a couple months ago, and they're a bit low. So, hey, now could be a good time to get some money because we're definitely going back to here. And this is where it sort of gets complicated. I'm going to pull up the max duration of SPY and sort of discuss what is going on. We had a couple large recessions in the US, right? We can see we had high times in the 2000s, and then we came crashing down, and that lasted around 3 years, just slowly going down. Then we got high times again in 2008 and came crashing down, and that also lasted a few years. The thing is, over time, the US economy, stock markets are not the economy. Over time, things have gone up. Warren Buffett said he doesn't think it's a good idea to invest against the US over the long term. And over the long term, things have gotten more and more valuable. The US GDP has risen, but then again, so has our debt. And that topic is rather complicated as well, because it's not just debt bad. Debt isn't necessarily good, but when we have a certain GDP and we can issue bonds and then use inflation to essentially devalue those bonds, there's a bit more that goes into it. The big concern is when we're getting more debt, like we're putting on significantly more debt than our GDP could ever possibly deal with. You can sort of think of it as someone owing more money than they make in a year, right? But I'm not going to stop and pretend that that small little insight is a comprehensive review of the topic. Over time, the U.S. economy has grown and stabilized. We've had some pretty big blunders in the past, and even bigger blunders than these two. And overall, things have gone surprisingly steady. In general, if you put your money into the stock market, into relatively safe parts of the stock market, over time it will go up in value. Now, things, like I said, could come crashing down. Is that likely? It's hard to say. But you also have to realize, if you put in all your money right before the 2008 recession, if you invested all of your money right here and just held on to it, in around 2013, you would be exactly back to where you were. Now, that might not sound very appealing, like, hey, you're telling me I put all this money aside and then I lose money for years and years, and then finally it gets back to what it is. Well, you're also, keep in mind, you're also earning dividends if you invested in SPY. And if you purchased 100 contracts of something, you could also sell covered calls. Options are very powerful, especially when the stock market is trading sideways, because they allow you to extract profit even when stocks aren't going up or down. I'll get into that a little later, but you were earning dividends. You could have potentially sold covered calls, and you might have been back to where you were not too long ago. And remember, you don't lose your money until you sell. And that's one of the things that's sort of concerning about new investors, where they come in, they're all excited, they want to make tons and tons of money very quickly, and they just panic. This is over the course of years. If we look over the course of a month, let's say you bought here and it went down and you freaked out and you sold and you lost tons of money, and then it went up here. If you just held a little longer, it's quite possible we would see 323 again, right? This is over the course of 1 month. Now, is it also possible things drop down big time? Yeah, that's always a risk. But if you're investing and you are scared of the long term, you are putting yourself at risk. It is very, very difficult to time the stock market. It is incredibly difficult to do that. And people act irrationally in the stock market. They do ridiculous, crazy things. If your goal is to make a ridiculous amount of money timing the stock market and you've never done stuff like this, then really you're just spinning a roulette wheel. You are hoping that it lands on black. It's dangerous. Investment, I would say, is a long-term process. You have to be willing to deal with things over the course of years. And if, let's say, you only have like $600 to play with, and it all gets tied up in a stock that's sort of trading sideways, it could be sort of defeating. But remember, if things are at their lowest and you just sell, you're solidifying failures. There is always a risk you'll never see the price that you sold at. But if you purchase shares, you could use things such as covered calls to try to extract more value out of what you're currently holding. You'll earn dividends, and dividend stocks tend to grow pretty steadily, assuming they are giving out dividends well, consistently, and things are going good. And you can actually look up this whole list of, they're called dividend aristocrats, which are excellent, very solid dividend stocks that have multi-decade records. And that's one of the things about investing is if you don't have a ridiculous amount of upfront capital, you're sort of limited. To sell covered calls on SPY, you would need 100 units of SPY, which that's a decent chunk of change. And if you're just getting into the stock market, most likely you have an app on your phone or something. That's a lot of money, and that's obviously not reasonable. So you might be dealing with smaller stocks and other things like that. I do think it is a decent time to get into the stock market. First off, trading platforms have gotten so much better. It was just a couple years ago that every single one charged a ridiculous amount of fees. So you would have to make a serious profit on a stock to make the fees worth it, because just buying and selling it would cost you a decent amount of money. You couldn't necessarily just swing trade easily. Over the course of the past 5 years, we saw pretty ridiculous growth, a huge bull run, which has some people concerned. We saw a huge dip to the current situation, and then we saw a spike back up, and now things have been trading sideways for a few days. Is it possible we go down? We really plummet down like 2008? It's always a concern. That's going to be your judgment call of how the current situation is panning. We're getting more and more data every day about how things are going, and for the most part, investors are optimistic, hence the price of stocks. Not to mention tech has been growing so much, and there's maybe even an argument that it's overvalued. There's a lot that goes into it, but I will say currently, now would not be an awful time to invest in the stock market. Things are relatively low, and within years, I wouldn't be surprised if we hit all-time highs. We've had fairly consistent growth, and remember, there's always things you can do in the stock market to make profit, even if stocks aren't going up or down. Things like covered calls, things like put spreads. You can do a lot of things to make money in the stock market. My advice for a new investor would be to find a stock that you really believe in. You can buy SPY, you can do stuff like that, but it would be nice to have a stock where you could have 100 shares so you have more options with it. And that's going to depend on how much starting capital you have. I'm not saying go out and buy like crazy ridiculous penny stocks and stuff just because you can get a bunch of shares. That's not necessarily a good idea. And it's also good to keep in mind that when you go all in on a single stock, something like that, you are putting all that money at risk on that single company. And not to go crazy and preach about diversification, but when you're starting out, I would say diversification is less important because you're trying to make some money. Diversification is more for when you have really put together a decent amount of money and you want to make sure it is solid and things are going well. Now, am I saying you should just YOLO all of your money on a single like questionable stock like Hertz? No, not at all. That's an awful idea. But for relatively solid, proven companies, there's a lot of potential. There's a lot going on in the stock world, and it's very scary. I'm sure you could see all these horrific articles and stuff. But for something like US Bank, huge, very solid company, proven track record, trading extremely low right now relative to what they were. Now, there is a huge concern about, people not paying their loans because of what's going on, and as stimulus checks don't get passed and other things. There's a concern and there's a risk. And it's how you feel. Are they going much lower? Would you be okay with holding 100 shares of them? They have a pretty solid dividend yield, higher than SPY. It's cheaper to own 100 shares. There's a lot of possibilities with a stock like this. And I think ultimately you need to ask, why are you getting into the stock market? Do you just want some quick cash? If you do, now is probably, there's volatility and people are scared. So there is potential to make huge cash with certain plays. But those are not good ideas for early investors. You could very, very easily lose that money. And you have to realize just the extreme amount of government intervention going on. If you bet on things going lower and things do get worse and things start going low, the government could step in and print a lot more money than they currently are. Be careful about betting on huge, massive swings. Right now, a lot of very solid, proven companies with great track records and tons of cash reserves are trading for very low values. I wouldn't think it an awful idea to buy into the stock market right now. Just understand the risks. Understand this could be a multi-year investment. That's all I have to say for now. One thing that is sort of a concern is that everyone is talking about stocks right now. Everyone. All these apps are getting huge. Everyone is getting into stocks. Everyone is getting into the stock market. And there's a concern that it's overvalued because there's so much new money just coming in. Institutional investors, the large companies and such, those are the ones really moving the market as compared to smaller private investors like you and me. But it's not necessarily something you can just discount. That's my opinion on it. Best of luck. Good luck with the gains.